Welcome back to a Real Estate Wisdom with Vish, and where we dive into the latest trends affecting the Canadian property market. And today we are exploring a hot topic that's making waves across the country: the federal government's announcement of a 2 month GST holiday. So let's break it down, what this means for Canadians and its potential impact on our real estate landscape. So, what you need to know: the federal government has announced a temporary suspension of the goods and service tax (GST) and harmonized sale tax (HST) of various items from December 14, 2024 to February 15, 2025. And here are some key points. The tax break applies to essential items and holiday-related goods, including groceries, prepared meals, children's clothing, toys, and even Christmas trees. And don't forget, booze. This measure is expected to provide about $1.5 billion in federal tax relief. Alongside the GST holiday, the government plans to send $250 checks to about 18.7 million Canadians who earned up to $150,000 in 2023. Merry Christmas. Well, what are the impact is going to happen? Immediate savings: a family spending $2,000 on qualifying goods could save $100 in GST over the 2 months period. In provinces with HST, savings could be even higher. What it can do? Well, boost to consumer spending. This tax rate could encourage more spending during the holiday season and into the new year, potentially stimulating the economy. For many Canadians struggling with the high cost of living, this temporary measure could provide some much needed financial breathing room. But don't forget, it's temporary. It's a Christmas holiday. So, it's good to have some relief there. While the GST holidays aims to help Canadians, it's important to consider potential economic implications. Everything comes with the consequences, isn't it? What can happen? Inflationary pressure. Some economists are worried that increased consumer spending could put upward pressure on inflation, which the Bank of Canada has been working hard to control. We have seen the last month, it's back to 2% now, inflation. Interest rate implications: the Bank of Canada might take a more cautious stance on interest rate cuts if they see this stimulus as potentially inflationary, I will say. But because it's temporary nature, the short-term nature of this relief might lead to spending rush during the tax holiday, followed by a potential slowdown afterward. So, what does this have to do with the real estate? So here's the impact on the real estate market. Let's consider how this could affect our real estate landscape. First of all, short-term boost. The extra cash in Canadians' pockets could lead to increased spending on home improvements or furnishings, benefiting related sectors. Other things are potentials for savings. For those planning to buy a home, the tax savings and rebate checks could contribute to down payment savings, albeit like very modestly. It's not much, but it's going to give some relief. Interest rate sensitivity. If this measure does influence the Banks of Canada's decision on interest rates, it could indirectly affect mortgage rates and consequently the real estate market, because market rate going to impact the real estate market. What the market psychology? Improved consumer sentiment due to these relief measures could potentially boost confidence in the housing market. Not so much so, but we'll see how it comes out. So While the GST holiday and rebate checks initiative isn't directly tied to real estate, it's crucial for property investors and homeowners to understand its broader economic implications. And here's my take on this. Keep an eye on how this measure affects inflation and interest rate decisions, as these factors directly impact the real estate market. Plan strategically. If you are considering home improvements, and the GST holiday might be an opportune time to make purchases. Why not take the benefit, right? Long-term perspective, remember this is a temporary measure. Make financial decisions based on your long-term goals rather than short-term tax savings. So, watch market trends, monitor how consumer behavior changes during and after this period, as it could provide insights into future market trends. Well, that's all for today's episode of Real Estate Wisdom with Vish. Remember, in the ever changing world of real estate, staying informed and adaptable is key. Join me next time when we explore how changing work from home trends are reshaping suburban property markets. Until then, happy investing. Well, what I will say about all this thing is, like, and while this is a temporary relief for a lot of Canadians, but the long-term impact is going to be very, I don't think it's going to do so much for Canadians, because you're going to get impacted by Bank of Canada interest rate changes, because they're going to be very cautious. There was, thinks that they might cut another half basis point, but now with this new announcement, it might change, because Bank of Canada might think it's 0.5%. It's not the right thing to do. Maybe they do 0.25, or maybe they don't do it at all. They also say, we'll take a holiday in cutting interest rate and during Christmas. So watch the market, keep on looking for the news, but you have to know, like, all these small measures do impact big time, even it's temporary. So thank you for watching. Thank you for showing your love. Love to hear from you, what you think about this and how it's going to impact you, what you feel, how real estate market is trending in Canada, and is that a good time to buy for you or sell for you? Keep watching. Until next time, bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.